We've got DP Singh, Chief Business Officer at SBI Mutual Fund, joining in to discuss that as well as lots more. Good to have you on board. Thanks much for taking time out. To begin with, how are you looking at the overall monthly contribution from SIPs at an all-time high figure in the month of January? What really do you believe this is indicative of?
No. It's as you rightly said that it's a very, very mature behavior by the Indian investors. More and more people are registering themselves through SIP route, and the trigger rate is also going up and up. Earlier it used to be 70-75%. Today we are looking at 85% of the money, whatever is triggered, is coming to the funds. So people have chosen the equity route to create wealth over a long period, and they are not shying away. Without getting into whether market is high or low, on every month we see almost 5 to 6 lakh new SIPs being registered in the industry. That's a very, very good trend.
Do you believe now that there is a lot of confidence on the long-term India story, and that some concerns such as what we're seeing with the geopolitical factors, the potential rate hike as well as FIIs that have been selling, that seems to be overshadowed by confidence in the long-term India growth story, which is only likely to continue and bolster flows going forward?
Yeah, there are two parts of it. One, of course, the belief in the India growth story, that of course remains intact. And there's a whole lot of unanimity amongst all the analysts, everybody, that India growth story is intact, is going to play over the longer period of time. That of course remains. But there's another part of it, that there's a very, very stable institutional money which comes to the equity markets every month, almost $2.5 to $3 billion money coming from the domestic institutional investors in the shape of SIP money, then money coming from the provident funds, and then the insurance premium, all put together is coming to around $2.5 to $3 billion. So any outflow through FIIs by FIIs is taken care by this. And we have seen in the recent past that whenever there is an outflow of $3, $4, $5 billion, so the local inflows always make up for that. So that's something very, very healthy for us. Earlier, that didn't used to be the case.
When we just talk about the fund flows into the mutual fund or into equity savings, as one would say, do you think there is a structural shift from earlier what used to be only gold, real estate, maybe PPF, EPF and some other instruments, that there is a structural shift in the young generation that a little bit every month will be saved into equity, or as equity will be used as an important financial instrument for saving?
That's for sure. But what has happened in the recent past, especially during the last 2-3 years, the youngsters have started putting their savings directly into equities, less into the mutual fund route, because there is a one-way run on the market. But when the markets get flattened, or when they see this kind of moves as we saw yesterday, so that I think they will move towards the mutual fund route now from the direct equities. That's my wish, because otherwise whatever they were just getting into the equities without doing much analysis. People don't have time, and especially now when people will go back to the offices, things are getting normalized. So it will be very difficult for people to do that kind of direct investments and spending time on the direct investments. So that will become a little difficult. But the equity investments are going to stay. So I think the mutual fund route will become more attractive now.
In terms of interest rates going up, how much of an impact do you think it will have on equity savings, or 100-200 basis point will really not matter much over the long run?
So that's what we feel on. And moreover, when we talk about mutual funds, generally what happened, we always used to talk about the equities. But today, mutual funds are providing the solutions, all kind of solutions on the debt side also, on the hybrid side also. So there are people who are going to put money in mutual funds. So hybrid is going to be another big category. And we, in SBI Mutual Fund, we are the strongest, the protagonist for talking about the hybrid funds. We actually are positioning ourselves as a house of hybrids. We know that these kind of situations will come, but equities will always remain an integral part of long-term growth for anybody's portfolio. So you can change the percentages only, but you can't remain out of equity if you really, really want to create wealth over a longer period.
Good morning, Mrs. Singh. I just want to take forward from what Pankaj was talking to you about in youngsters, right? And it's no secret. A lot of them came to the market also because of a Zomato IPO, Nika IPO, and all of this has been very well documented too, right? So with the new age companies, these kind of brands falling 40%, 60% from the highs, some of them even trading below their IPO prices, how are you going to instill that confidence in the youngsters?
So that exactly the point which I'm saying, because these were being done by the youngsters without really understanding the business plans. And see, in mutual funds, for example, today we have got in SBI Mutual Fund, we got a team of 60 analysts. They look into the see business plans, the data, financial data, very closely. And for example, I mean, last year if there were 75 IPOs, we would have participated in not more than 25, 30. And our success rate where we were able to create money is very high, more than 90%. Hardly one or two would have been there where we didn't make money, but otherwise we made money. And especially in the first stage, kind of companies, if you talk about, even if we participated, we booked profit at a right time, and we were sitting pretty. Then the kind of sizing, the kind of liquidity, the kind of risk which are there can be done by a professional team. So people who participated in a big way and see, as you rightly said, are lying on a negative of 40, 50, 60%. So they'll have to have a relook. But one thing is sure, they are not going back to the traditional instruments for sure, because that's not something where they can create wealth. They have surplus money. They have the risk appetite. They will definitely remain in equities only, but will do it in a much more analyzed and much more knowledge based manner. And that's where the mutual funds come into play.
Okay. Now, with all the talk of disruption, technology, fintech that is supposed to rewrite the rules for the mutual fund industry too, I'm not going to get into names, but we all know, right, how the new age companies
Yeah.
are trying to disrupt this space. How will SBI maintain its edge?
So see, there's a whole lot of Indian investor base is huge. Just to give you an example, State Bank of India, our parent, has a depositor base of 450 million, almost 45 crores, right? Out of which, even we take out the 200 million, which are not the target audience for mutual funds. There are around 200 million or 20 crore people who are the target audience for mutual funds. And out of those, hardly 4 or 5 million are part of the mutual fund or the equity investment route. So the universe is so huge. We generally talk about only the new age, the youngsters. Yes, that is there. But other than that, also there's a huge database across the hinterland of the country. There are a lot of investors sitting on the sidelines who have to be educated. And for fintechs, also fintechs are definitely going to play a very major role. More than anything else, the ease of investing, the ease of doing business, with the investment, doing investments is going to be the key. As well as whether they'll be able to see, they are playing on the lower cost era. Lower cost is fine, but if the investors are looking at an alpha generation, which can be done by the active investments. So I think nobody will mind paying 1% fee if they are able to generate an alpha of 3 to 4%. And we in SBA Mutual Fund are of the firm opinion that the way where Indian economy is, where the Indian capital market is, there's a huge scope of creation of alpha over at least next 5 to 7 years, for sure. Before we reach the level where the developed countries are, where the indexes are giving very equivalent to the return, and it's very difficult to create alpha in the active funds. I think the active funds will continue to play a major role in India at least for the next 5 to 7 years, and there the mutual funds play a major role. The fintechs, they are coming mostly into the ETFs or index funds. Yes, piece also will grow, and we are also one of the major players there. So we have every kind of solution. You talk about the
Right.
ETFs, you talk about the index fund, so everything is there in our portfolio.
Mr. Singh, appreciate your time. Thanks very much for giving us a nuanced look at the investor behavior and what you've made of the kind of fund flows, that we've seen in the equity markets on the mutual fund SIP flow side.